The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. Can everyone see my screen and hear me? If you can, just go ahead and type in a Y or yes. All right, thanks, Fred. Let's go ahead and get started. So JPat asked a couple of questions in the link thread on EWT that we can start with. One, does EWT have a firm stance on whether pre or post-market prints should be considered in the counts? I know that you use them, meaning me, Zach, but Garrett does not. And so that's probably going to be for more individual stocks, which leads me to believe that there's some debate on the topic. It seems that post-market prints often come right up to or against relevant highs or low, and seem so crucial to know whether to always count them or when to discount them. I think it's a good example is that Garrett and I are both going to maintain counts for the S&P cash index itself, as well as on the ES futures. A lot of it depends on how closely, how small of a time frame and granular you're trading something. If we're trading futures, then obviously we're going to be looking at a smaller time frame for the futures. And if we're just doing a larger degree swing move or using SPX options or maybe SPY shares or something like that, we might focus more just on or just looking for broader portfolio guidance and overall market risk. We might look more just to the cash index. Sometimes there are moves that happen outside of regular trading hours, and the futures or pre or post market data, if you're talking about individual stocks, can help fill in some of those missing subwaves if it's a significant amount of price action. A lot of times it's not the most significant moves, or if it is seemingly significant, if you look closer at the actual amount of volume, sometimes it's on very, very low volume. So sometimes those freak spikes or pops can be discounted. And I think kind of looking to see how things behave in regular trading hours and comparing it to the chart that doesn't have that, it will give you some more clues as to whether or not they should be included in the count, or you can kind of ignore them. The next question that JPat asks, and we'll use that to zoom in on our larger structure here, is can you discuss the typical target wave size for wave ones? And at what point do you start to get concerned you might be shifting to a diagonal or some other pattern? So that might be a little bit in depth for what we could to discuss here. There are some webinars that I would point you to in the educational section on Fibonacci pinball and also maybe the diagonals. But what I want to do is we'll kind of look and see what we should see by rebuilding. You guys, most of you know that I have been posting a lot of details on the structure inside this C wave and what is most likely a corrective bounce running into resistance in the 4400s, and has much less of a chance of extending to new all-time highs. There are other charts that Garrett and I feel have a stronger potential to do so, which is why we posted those as a special update in Stock Waves. And as we've talked about in the Stock Waves webinar and also posted on other places, RSP and a couple of other things do have a better chance of getting a higher high on this same swing move, and that can count as an alt of the fifth wave of primary wave 5, but it should not be viewed as a strong probability at this time. Instead, looking more towards the resistance in that 4400s region, and then something more bearish starting to play out, potentially being the start of something much more bearish for the even much longer term. As far as this larger, let me fix this chart here. There we go. This larger super cycle degree wave 4, that can take several decades to fill out, and certainly retrace all of the post-COVID move and even most of the entire moves off of the 2009 lows. So that is, even if we do still try and make a nominal new high, I'm keeping this giant yellow box as far as another major topping zone on my charts just to remind everybody that even if it starts to look like we're getting more extension, that is the last hurrah if it's going to make a higher high, and more likely not. So with that in mind, let's jump into the smaller degree, and we'll also use that to talk about JPAT's question as far as placement of a wave 1 inside a larger swing move. So zooming in here, we have what is not very reliable as an alt wave 4, what looks more like 5 waves down as a leading diagonal for the larger degree A wave at parentheses A off of the high. That's intermediate degree. We can go ahead and add in a few more subwaves here. I don't have this chart as detailed. We got an initial ABC move up off the low, about 7.5% into some initial resistance. We wanted to see it hold a higher low as a corrective retrace. We got a nice little ABC drop right to about the 50% retrace, and then filled out another 5 waves up to a measured move for the C wave, and then got our ABC flat consolidation into the December lows, and then started to move up off of that. Now, we can look at our fibs for our C wave here, and a C wave is a third wave in some respects. It's an A wave is a wave 1, a B wave is a wave 2, and a C wave is a wave 3. Just usually your A wave is going to be a 3-wave move, and your C wave is not going to hit the same fib extensions that we normally expect in a third, but it does usually play its own Fibonacci pinball. And like Fibonacci pinball, we want to see wave 1 usually head to the 382 fib in that fib extension, which is the measure of wave 1. We'll go ahead and put the fibs here for our larger B wave as well. So that is this fib extension here is the measure of the A wave projected off of what we think is the low of the B wave. And that gives us a 100% extension at 44.20, a 1,236 extension at 45.90, 92. So then we say, all right, we know that before we have any of this move off the low, we know that we want our wave 1 to head towards that 4,000 region at a minimum. And so we would do something like this and want our 3 here. And then we start to look and see, all right, do we have enough subwaves off the low once we get to that region? Are we getting what looks like 5 waves up? And we do, in fact, have the ability to count. I don't know why it's giving me a red exclamation mark. Let's ignore that. We can certainly count 5 waves up here as the wave 1, a corrective retrace to a 618 here, and then a start to wave 3 that looks like we are breaking out in the heart of at the moment. So one of the things that I'm going to switch over to another tab and talk about how we use alt counts just a little bit. So you can see this is the same A wave that we were looking at. If we zoom out here, A wave, B wave, and then all of this crazy stuff going on inside the C wave. And that's what we're going to zoom in and look at the structure here on this tab. So again, we have that initial move up that we wanted to see as 5 waves up into the 4,000 region, which was the normal expected move for wave 1 of C. We got a corrective retrace into fib support and as well as moving average support, and a nice reversal off that low. You might notice that I had talked about a couple of times the potential that this or even this could have counted, instead of counting this as 5 waves up to here, this could have been 1, 2, 3, 4, and 5 to here. So there was a slight chance yesterday and this morning that we were holding as a B wave and trying to start a C wave down in the A wave of a wider flat that I have darkened, once we were holding support as the potential microwave 2, then it made that much less likely, heading into the Fed, that there was room for some shenanigans at the micro degree there, but certainly breaking out over that high made it very clear that we didn't have to worry about that alt very much anymore at all, and are much more likely in the heart of so here's where we play with all of the different degrees, right? So we have inside that C wave, we have our 1, 2, 3. Let's move this guy over. Trying to get a view where, here, I'm going to hide some of these fibs so it doesn't get in the way. I think I need to be on an hourly so that we can see everything the way I have it spaced out. So inside our, stop moving. Oh, that's good. You can see the bottom of the A wave. Okay. So inside our wave C, targeting the 4420 region, we have 1, 2, 3, 4, 5 at the minute degree. Now, if this is our low for wave 2, which it certainly looks like that's the case, then we can break down the smaller subwaves inside this circle minute wave 3, and that's the parentheses lowercase Roman numeral 1, 2, 3, 4, 5. So we know based on Fibonacci pinball, if our wave 1 of 3 heads closer to the 0.618, then wave 3 of 3 should head at least to the 1236. In this case, it looks like it's going to be targeting the 1382 here at 4247, which might push this wave 3 even further up closer to 4360. And then this can hold fibs somewhere around 4200. And that might even push this fifth of the C wave up a little bit higher. I don't know if we're going to get all the way to 4590, but we can get closer to 4500 the way that this is acting. So now when we zoom in and look at the subwaves inside this wave 3, so if I pull this over, here I'm going to scoot this over a little bit, not because I mean, it could certainly happen that much faster. I tend to want to stretch things out a little bit longer in time and not rely on them happening so much sooner. But if we're already at the heart of this move at the micro degree, then all of these could easily come in. But inside this circle wave 3, we have our minuet, that's the subwave parentheses lowercase Roman numeral 1, 2, 3, 4, 5 inside that move. And again, we are targeting the 4247, at least the 4208 level, but more likely the 4247, based on the fibs that we have for the subwaves inside that move, which is subminuet, that's lowercase Roman numeral without any parentheses or circle. And we have a pretty strong, we knew this was a strong 5-wave up move. It looks like it expanded flat into the 618 again for that 1-2-1-2 start to the circle wave 3. Then we got another 5 waves up as the micro wave 1 held that choppy consolidation at I think we held a 50% retrace at the post-Fed quick low, and then a roaring move to the upside that got all the way to the 100% extension of our wave 3. So we know based on normal Fibonacci pinball, this is a standard resistance region, but based on the subwaves inside that, I still think this is only the microwave 3. And when we jump over to the ES chart, we could even get one more extension tomorrow for this microwave 3 and then hold a 4th and a 5th wave up. But looking like this is going to get closer to the 4200 or 4208 for this wave 3, and then closer to 4250 region for the 5 of parentheses wave 3. So this can start to slow down a bit again. I mean, this is the actual heart of the move, this micro degree wave 3 here, inside this 3, inside this 3, inside this 3 of our C wave. So very fitting that it happened on a Fed day. Now we can get a little bit more extension and then a 4th wave, more extension and then another 4th wave, more extension, then a bigger 4th wave, then even more extension up towards ideally the 4350 region, and then another, when we zoom out again, another 4th wave, and then that can take a little bit longer. This is a pretty fast wave 2. So this 4th wave could be wider and take a little bit more time off the clock, and then another extension up into the 4400s for that C of B. And this is when we have to really start getting very, very defensive, even into the 4360 region, because that's getting close to a measured move. And it would be possible to squeeze in enough subwaves into here for all of that move. So that's when I'll start to be posting some more charts reminding people to keep the overall skew of the market in mind when you look at the thing, and we're here getting very, very close to our measured move targets for all of the C of the B wave and normal resistance for that B wave. Yes, we can scalp those moves higher, but have to maintain a strong awareness as far as how we're positioning overall and what measures we've taken to protect overall assets and portfolios from that potential of a pretty big move down, at least towards, I think, maybe the 3,200 region. That's where this would be. If we get to 4,400s for our C of B, and our measured move down here takes us right to 3,200. Can certainly extend more than that, but that's what we'd be looking for as an initial target. All right, another question. Yeah, Vinny, we'll get to natural gas in a minute. In setting targets for nested 1s and 2s, which 1s and 2s should take precedence? I think you always defer. Let's go back to that, what's the frequency Kenneth chart. We always defer to the larger degree. So that's why you might have seen me posting stuff that, when we're looking at this move, we have the potential for a nested structure, but I was saying, the risk reward is that we're heading higher and more of a C wave. There is potential to get an alt of the wave 2 or any of these wave 2s, but we do have that nested structure that we can consider. When we jump over and look at, let's go back to the primary tab, and let's go to the ES, and then we'll go to the micro counts there. Micro counts. Let's zoom out just a little bit more. So let's zoom in a little bit more. I'm zooming out. Hopefully it won't freeze on me. So the other day, actually yesterday, when we were looking at this move as being 5 up for our microwave 1 off of our 618 retrace that we hit at the pre-market low, and counting this bigger expanded flat for the sub minuet 1-2. Thought this was 5 waves up as just wave 1, and that we should get a microwave 2 retrace. But that was when I started to highlight the potential that we should be aware of. That was even possible to count 5 waves up here as a smaller micro 1, and then another 1-2, and then another 1-2, all as a nested start inside this 3. So if we gapped up strongly past the 4,100 region, we wouldn't be able to really expect that microwave 2 retrace anymore. The market was favorable enough to give us that microwave 2 retrace, very nice and calm and steady and orderly, right into the Fed, and then take off from perfect support. So that often doesn't work out as perfectly as that, but again, would always defer, even though there's that potential. Say, the larger degree here says this is ideally a microwave 1, we should get a microwave 2 and then head up, as opposed to an even more nested structure at the smaller degree. Not sure you. Okay, I think I answered that without going to the RSP chart. There was a question about PSAR and iClouds. I post these usually later at night. I don't make a big deal about posting it during the daytime because it is kind of a confusing chart to look at if you're not careful. I don't use this as the way of illustrating what I think is happening on an EW level. The PSAR are these blue dots. It stands for parabolic support and resistance. I just posted I posted a beginner circle post this morning, and I made it into a bigger thread on Twitter, just kind of explaining how I use it at different time frames. But basically, if you have bottom dots, then you are over support which it kind of gives you a bit of momentum, and it adjusts, and every day that you're above it, you print a new dot on the bottom side. And if you, so we did get a top dot the other day, which I am on the daily, which I said that was another reason to keep in the back of your mind the potential of that alt wave 2. But popping back over it was very strongly bullish again today. But I use it at a lot of different time frames. So we just triggered on the 3-day, which that should, this new blue dot here, we should start to get a whole lot more blue dots over the weeks ahead as we fill out more of our C wave up. And then maybe that gets broken on the 4th, or maybe we end up holding that as support for the 4th, get that one more high, and then the break of the 3-day would be a really good indication just from that additional indicator tool in a momentum standpoint that the B wave has topped. So it's one of the ways that I look for it, and I check this on different time frame. It's just another tool. The same thing with the clouds. It's another way of visualizing support and resistance. I don't know what the calculation is of which moving averages this is using and what the offset is in terms of the offset forward from current price, but it's started in Japanese markets like eons ago of drawing these clouds on charts. And I feel like a lot of times it gives you another good indication when you have strong support, when you have weaker support, when you're under very, very clear resistance, and how the Elliott wave pattern sometimes plays along nicely with those clouds as well. And again, it's a very busy chart, so looking at it on smaller time frames gets even busier, and I think there's less information to glean from that, so I tend to keep it at a much larger time frame. Going out to a monthly even, we can see the monthly isn't going to flip in between that B wave inside the B wave. It just stayed, we got on the top of the A wave, we got to a monthly dot. So we should keep a couple of those monthly dots as we fill out more of our B wave bounce, but then it's going to resume this trend of the top dots on the way down. Then this B wave at a larger degree might actually have, a little bit of an ABC structure to the bottom dots and top dots, and then top dots again. Carla, it sounds like you're asking for a specific measure of probability, and as far as getting that higher high, and I just think that it's not something that you can say, it's 7 camels and 4 penguins. It's just the greater probability based on the overall structure. What we see in lots of other things is that we're getting this B wave. And the fib structure inside that B wave certainly seems to be filling out, pointing right to our normal targets for the B wave. So it's not impossible, but this is what's more probable. And this move is included in any potential move beyond that. So as long as you keep your sights set on this move, if from there we don't completely tank very, very quickly, which is a huge risk, but instead maybe get a little bit of sideways consolidation and then give, some clear setup for more extension, then we can look for those setups for more extension. But, I think looking to play defense into this resistance is the far more prudent and reliable thing to do. John, where to put stops for after today's move and individual stops? Well, okay, so for today's move, let's go back to for the market itself. At this point, if we are in the middle of an impulse for our third of the C wave. If we fall under 4,100 again, then it starts to put that impulse in jeopardy. Really we want to see it hold closer to 41.19 and get further extension, and then just continue to hold that 4,100 region as it gets more distance and retests it, more distance away and retests it. And then each of those fourths ideally holds a little bit higher along the way up until maybe we get to the circle wave 4. So that's kind of a good support region to look for. For many other things that didn't quite advance as much, a lot of things look like they only just started their thirds, and so I would use either the January 30 lows or today's lows as equivalents for pretty key support. If anything starts to break back under those more recent lows, then at the very least, as much as this looks like more than just wave 1 and wave 2 now, we have to start considering that there is still some alt shenanigans. Avi posted, I think, just recently, a possible counting this as a diagonal where this is 1, 2, and it's further along in the third, and then might get maybe a B wave, and then a C of 3, and then a fourth and a fifth. I think we should really we should heed very, very carefully if some of the key support levels here at the 4100 region are not able to hold. All right, let's move on to a couple of other instruments. Oh, hold on, Isha has and then again, for those you could use for a lot of individual names, and then certainly we'll be posting a lot of the updated key support levels as we go through those updates. It's highly likely the LD off the early 2023 low is an A wave. Is it highly likely is an A wave, and we are in a 3-wave move for an expanded B wave. Expanded B wave. I'm not sure I completely follow what you're asking there. I'm try and go out to the primary that's a little bit cleaner. So the LD off of the early 2023 low. I mean, I have a December low here. I'm not seeing that. I mean, maybe this is you could say that this is a B wave, and you try again for a B wave of a flat. But again, that's going to be if we start to break under 4100 and not hold any immediate support in the 4000 level, as maybe A, B, and C of 3 instead of an impulse. But that 4100 level is pretty important now. All right, let's move on to gold. Gold pressed a little bit higher yet again today. My view on gold is that it is longer term bullish. I think we have clearly started a fifth wave, a primary degree wave 5 up. My concern is that, especially with this push a little bit higher, it makes this an even greater potential that this might have been a very shallow fourth wave inside this blue C, and we are completing wave 1 up as an ABC move instead of getting a fourth and a fifth. So that would make the entire primary wave 5 an ending diagonal instead of an impulse. So this could still just be some more extension of the 3. We get a fourth and a fifth wave up a little bit higher now. But whether we get a fourth or whether we get an A wave in a blue wave 2, this consolidation should be about the same. So a consolidation to 1850 region is really what is strongly still needed right now to have anything reliable at a larger degree to project more immediately forward. So we can zoom out here and say, nope, this one. We can zoom out here and say, we're still looking up, but more and more, this is looking like 1, 2, 3, 4, and 5 waves up for that blue C wave for all of wave 1. And then instead of just getting a fourth and then a fifth wave higher, we can get an A, B, C for wave 2 back into the 1700s. It doesn't have to come all the way down to 1742. That is the 618 though. So this might be very frustrating for a lot of players in the market, but I look at this and I did the chart this way where I highlighted all of these subwave moves is that these are going to be very high probability swings, that are going to last a couple weeks to a month or two at a time. And that gives you a lot more linear travel that takes a lot longer to fill out, and then leaves a window open much longer for the mining charts to fill out their big moves to the upside. A lot of those look like 5 waves up off of the low. So when we go over here to GDX, GDX could still get more of a 4th and a 5th wave up, but especially if it gets any more extension here without getting more retrace first, it'll look even more like 1, 2, 3, 4, 5 waves up for all of that wave 1, and do for an ABC for wave 2 back into the 27 to 26 region of support. Here's my larger time frame chart. So again, whether you're looking for an A wave of a yellow wave 2 or just a 4th, it's the same support region into the 28s is ideal to give you any kind of upside chance at a B wave bounce, a 5th wave to the upside, or maybe even that's all of a shallow wave 2. But in all of those scenarios, we should see some more consolidation than what we've gotten so far. We're thrilled with this move off the low. It held exactly where it needed to. It gave us an initial move up and a higher low. We were able to follow up some moves in the metals and mining service very, very nicely, but a lot of those are due for some consolidation. So that would be great. Let's move on to... So Carla asks, sometimes we talk about a consolidation playing out in time rather than a specific price drop. You still do need to have something of a bigger drop. I mean, you do have to at least come close to that normal fib zone, which the 382 retrace, if this is all of wave 1, if we're using GDX for an example, if this is wave 1, then the 382 is at 2830s down to 2550. So if we got an ABC retrace into the lower 28s, which is also support for the wave 4 and not coming down closer to 27 or 2550 would be more reliable as all of the wave 2 here. If we held a wider flat, for example, into the low 29 region or mid 28s, that's going to be above the ideal 382 retrace, but especially if it's a wider flat that filled out in time. So it was a larger consolidation, at least time-wise, than this is a 4th wave and this is a wave 2, then that's more reliable as all of the wave 2, even though it didn't come down price-wise all the way into the more reliable part of that ideal fib zone. Does that make sense? But you can't just say, this is, if it doesn't fade at all, you don't have a reliable consolidation even through time if you get no price movement. Yes, Howard, this is motive wave. I think it makes it incredibly easy for using, for applying Elliott wave counts and fibs and everything else. It's a fantastic tool. All right, let's move on to oil. Let me zoom out here. So Garrett and I are more immediately bearish on oil. It is possible to count a larger ABC move down complete, and then maybe this is just extension of that. But a lot of things that we look at, particularly a lot of energy names, very much look like a bigger either a B wave topping here or the B wave topped here and 5 waves down and 3 waves up as a 1-2 start to a C wave. So that's the count that we have applied to oil. And especially, even if you're going to consider this as something more bullish, you really cannot ignore how clearly this looks like an ABC to the upside for an A, an ABC retrace for a B, and 5 waves up as a C wave. not just 5 waves up as a C wave, but 5 waves up as a C wave to pretty much a perfect measured move wide flat as this wave 2, and then turning down pretty sharply from there. So I would like to see more of a wave 1 fill out. This was kind of the minimal ideal target for wave 1, but the price action that we're seeing off of that high looks more like this is 3 waves down for wave 1, a bounce is wave 2, A, B, C for wave 3, a bounce for wave 4, A, B, C for wave 5, and then this would be the wave 1 of our third. So then, since that's a leading diagonal, we can look for a little bit of a wider bounce, maybe back into the 77 region, and then should fill out the rest of that impulse to the downside. Natural gas looks a lot different to me. I think natural gas has filled out at least the third of a larger C wave down, and the way it's stretched off of the November high has come to a 1618 extension for potentially all of that C wave. Now, again, just the way that we were looking at the market as a whole, and treating the ABC bounce as corrective, as opposed to looking for a new high as that green circle wave 5. Here, maybe this is all of the C wave, but any bullish move off of a potential low forming here is going to include in it whatever bounce we would be getting as a fourth wave. So if you are looking only for a fourth wave and something more bullish starts to develop, then that should also be profitable, even if you only get the ABC bounce as wave 4. Likewise, if you only get the ABC bounce for wave 4, even if you are very, very much convinced that this might hold as all of the C wave, it would be beneficial to look to trim profits and hedge for another swing move down, or at least scalp to lower lows in the low 220 region. All right, let's move on to bonds. I'm going to zoom out just a little bit. Nope, not that much. Here we go. So off of the October low that I was counting as potentially a very, very significant low, but the move that I'm looking for is ultimately a corrective move to the upside, even if it does end up getting all the way to a new high. So initially we're only looking for an ABC move up, and then for more of a retrace. We held a higher consolidation and then got a fifth wave up. Then we got that retrace. So we got 5 up and 3 down. So even though we're counting this as an A and a B wave, we're looking for a really nice start to a measured move. And we got what counts good as 5 waves up for wave 1 of that measured move. We have a nice flat consolidation holding pretty high fib support as wave 2 inside that measured move. And while there is still some chance to get more of this wave 2, less so with the move up today. Really, the better opportunity was to hold under 130 and then drop down to the 128s to get one more low. Maybe this is an alt of the B wave in the wider flat, but more probably this is the start of wave 1 of the third inside that C wave targeting the 144s to 146 region in the 30-year Treasury futures. This is, it says US, but really it's the ZB futures. You can apply a very similar count to TLT, but keep in mind that TLT is an amalgamation of the ZB futures and the ZN futures, and is also traded by different participants in the market. So while it is meant to track those instruments or a blend of those instruments, it does not always do so as perfectly. So I do use it as a trading vehicle, but I place a lot more emphasis on the structure in the 30-year Treasury futures. But we do have the same possible 1-2 does certainly allow for more of a wave 2 and even looks more at risk than the futures. So again, the futures look much more like they can be ready to break out in the wave 1 of this third, Whereas if I were only looking at TLT, I might be a lot more hesitant here in looking for being much more reliant on getting more of that wave 2. So it is possible to get more of the wave 2, but I would not rely on getting more of the wave 2. If we did get more of the wave 2, I would certainly take advantage of that as another opportunity to add. The next opportunity to add, in addition to maybe getting more of a wave 2, is getting more of a 5-wave up, 3-wave move down start to this wave 3. All right, there was a request for the Russell. The Russell, I mentioned before, I don't know if it's been recently in these webinars, but I posted it on the board in the EWT markets room, did not make a lower low in October. So it counts better as its A wave at the June low, a very, very deep B wave, and was already ahead of the game inside a 1-2 start to its C wave. But that C wave counts better, or that C wave counts better as an ending diagonal. So the third of the C wave should be an A, B, and a C wave move up, with this most likely being all of the B wave, and a 1-2 in the third, so 3, 4, and 5 waves up really should be targeting 2088. The fourth wave in a diagonal can overlap with the top of wave 1. It doesn't have to. This is actually going to yell at me if I don't have it overlap, though. That's what those little red exclamation marks are. Most of the time is that maybe I'll have this as a diagonal, but this fourth wave will not actually be crossing into the top of wave 1, so it'll give me a little exclamation mark that says, in a diagonal, wave 4 must enter the price territory of wave 1. Bah humbug, we say. We don't think that it must. It often does, or it certainly can. It's one of the only times that a fourth wave can overlap wave 1 is in a diagonal, but it does not have to. So a lot of other times I might just go over here, preferences, and check ignore issues. And that gets rid of that. So we can get rid of this question mark A and just go ahead and deconstruct this as a consolidation inside that move. And then even zooming in further, we can look at the subwaves inside that C wave and decompose that as an impulse. Yeah, I guess I'll agree with that. It's, instead of counting as a 1-2, 1-2, it's counting 1, 2, 3, 4, 5 for larger wave 1, and then today was just the wave 2, and then in the heart of that move. Looks good. All right, what else are we missing? Usually we talk about the dollar, don't we? Not what I wanted to see on the dollar. I would really like to see a bounce. But as this purple wave 5 of the A wave, again, we can't always rely on A waves being 5 waves down. Most of the time, A waves are ABC moves. So we started looking for the potential for a bounce here, got a clearly only corrective move, so we got extension to the downside. This can actually be 1, 2, 3, 4, and 5 waves down, although this is really ugly as a 3 and a 4 inside that fifth wave, but due for a bounce. Because this is a 5-wave move down for the A wave, though, then it should follow zigzag rules. And in a zigzag, that's where the A wave is 5 waves, and then C waves are always 5 waves. The Elliott wave textbook teaches us that a B wave bounce in a zigzag, or a B wave, B wave bounce in a zigzag usually is not going to get much more than the 38.2% retrace. So that might fill out as a wider flat and take a couple of months to do so. But this 105 to 107 region should really hold any consolidation there as a corrective bounce. Silver is just not as clean as GDX and gold. It's a different chart because it made a pretty substantial low here in September, and then different than gold, it held a higher low in October. So it could be ABC up as wave one in a larger leading diagonal. My preference at this point is that it holds as a fourth and gets a fifth wave up as a smaller leading diagonal for the parentheses wave one of primary wave three starting. And then we'll then need a retrace. So either it gets more of a wave four, then at least nominally higher as the fifth, and then a retrace, or just more of the wave two here from ABC up in blue. But I faded that out. But really much messier than what we're looking at on gold, and certainly more than messier than GDX. Any other questions before we wrap it up? Nope. All right. Well, I'll get this uploaded for you guys, and I will see you next time. Oh, thanks. You're welcome. All right. Bye, guys.